Well, there's been a lot of talk lately about chaos spilling from the Middle East into the metals market, and then somehow landing right on the bourse floor at a coin show. Like every headline about oil, Iran, and shipping lanes is supposed to tell you exactly what gold, silver, and collectors are going to do next. So, in this video, we're going to separate the noise from the signal, and you are going to walk away feeling a lot calmer and a lot sharper about what actually mattered here. It is Tuesday, April 14th in New York, and comment below what day and date you're watching from. And real quick, if you value the way I break this stuff down, support the channel by subscribing and commenting John A.G. Best. That helps more than you know. Because here's what made this whole thing strange. On one side, you've got the big dramatic talk. Iran, oil, the shipping route, national security, fear, inflation, gas prices, gold, silver. Everybody acting like one event is supposed to flip one giant switch and turn every metal buyer into a panic buyer overnight. Then on the other side, you've got the real world, a coin show in Portland, Oregon. Cases full of old dollars, paper notes, Carson City holders, shipwreck material, dragon pieces, accessories, pattern coins, and a bunch of people walking the room, not like zombies chasing headlines, but like actual collectors trying to decide what deserves their money. And that gap right there, that is the story. Because people love a clean narrative. If tensions rise, oil goes up. If oil goes up, inflation fears go up. If inflation fears go up, metals go up. Sounds neat, sounds elegant, sounds like it should fit on a bumper sticker. The only problem is the market has not been rewarding neat lately. Based on recent market action, crude has been whipping around hard on every twist in the Iran story, with prices jumping toward triple digits and then backing off again when traders start thinking diplomacy might still crawl back into the room. And while that happens, gold and silver have not been moving in one perfect straight line with it. Gold has stayed historically elevated this year, silver has remained volatile, and the relationship between fear and price has been a lot messier than people wanted. So when somebody says, obviously oil is up, therefore metals must do this next, I want you to slow down. Maybe. Maybe not. Sometimes the market sees higher oil and thinks inflation. Sometimes it sees higher oil and thinks stronger dollar, tighter policy, weaker growth, lower industrial demand, thinner risk appetite, or all of the above fighting each other in the same hour. Silver especially can get pulled in opposite directions because it lives in more than one world at the same time. It has that monetary identity, sure, but it also has that industrial side, and those two personalities do not always cooperate. That is why the most honest takeaway from the macro side of this story was not certainty, it was humility. There was a guest at the show making basically that point, and I think that part matters. Not the theatrical stuff, not the chest thumping. The useful part. The useful part was the admission that this market has been asymmetrical, uneven, and harder to map than people expected. That's real. In fact, one of the biggest mistakes metals people keep making is assuming that geopolitical danger automatically means instant payoff. It doesn't. Sometimes it does. Sometimes it doesn't. Sometimes price moves first, headlines catch up later, and by the time the public starts shouting, the trade is already tired. And that is exactly why I like the advice to stick to your plan. Not because plans are magical, because panic is expensive. If you're stacking, collecting, allocating, or just trying to build a position over time, the outside world will always try to hijack your timing. 1 week it's a war scare. 1 week it's a banking scare. 1 week it's a recession scare. Then a ceasefire shows up, oil gets hit, the dollar wiggles, and suddenly the same people who were screaming about moonshots are acting like the whole thesis is dead. That's not discipline. That's emotional whiplash. From recent industry updates, one thing we do know is that investment demand for precious metals has stayed serious even while price action has turned erratic. Gold demand stayed very strong last year. Silver is still dealing with another expected market deficit, and exchange operators are even rolling out products aimed at heavy retail interest. In plain English, interest in the space did not vanish just because the path got messy. Now with that on the table, let's get to the part I actually found more revealing than the macro talk. The coin show. Because a coin show tells you what people do when real money leaves the wallet, and that's where all the internet certainty starts getting tested. So the room is in Portland, Pacific Northwest crowd, good traffic, dealers set up, cases lit, people leaning over the glass, and right away you get one of those classic show moments where somebody spots a handwritten special and says, "Hold on, is that real? A one-day deal on Eagles." That kind of thing always wakes people up because even if the hardcore numismatists don't chase basic bullion first, everybody understands a show special. It creates motion. It creates conversation. It gets people to stop, point, ask questions, maybe pull a friend over, maybe circle back later, maybe not. And that's part of what makes live events different from browsing a website. A good table doesn't just display inventory, it creates little collisions. But the most valuable part of the show coverage, in my opinion, wasn't the deal. It was the beginner advice. That part was excellent. Not flashy, not viral, just useful. Be polite. Don't rush the table. Don't cut in front of people. Respect the dealer's time. Respect the coins. Take a lap before you buy. Then take another lap. Compare quality, compare eye appeal, compare price, and only then make your move. That is grown-up advice, and it applies whether you're buying a common round, a better date dollar, a tone-type coin, or something so niche you need 3 reference books just to understand why it matters. And let me add something to that. At a real show, your first job is not to spend money. Your first job is to calibrate your eyes. Screens flatten everything. Cases don't. In person, you start seeing luster, hairlines, color, strike, surfaces, holder quality, sticker premium, originality, all the little details that separate a decent buy from a regrettable one. That education compounds fast if you let it. If you're successful, share your success story in the comments so others can stay motivated. Now, once the walkthrough settled in, the inventory started telling its own story. There was also a side note about taxes, and that sounds tiny until you're the one buying. People absolutely think about the all-in cost, what gets exempted, what doesn't, and whether a show purchase makes more sense than waiting. It isn't glamorous, but friction changes behavior. A few extra dollars can be the difference between a quick yes and a long pause. The paper side of the case mattered too. A strong old silver certificate, a note from the era when the United States administered the Philippines, engraving that makes you stop instead of glance and move on. That's a reminder that the hobby is wider than a bullion conversation. Currency people aren't asking the same question as stackers. They're reading design, signatures, language, district names, and print style. Mixed shows let you watch those different ideas of value trade places in real time. And I don't want to skip the government holder conversation because that teaches a bigger lesson. Packaging changes perception. Put a coin in a format collectors trust or think is scarcer, and the emotional response changes. That's not irrational. Provenance matters, presentation matters, survival rates matter. The wrapper can become part of the object. The same thing is true in the broader metals market right now. Gold's strength has not only been about fear, it has also been about official buying, reserve diversification, and a world that feels more fractured than it did a few years ago. Silver hasn't only been a safe haven story either. It keeps getting tugged by manufacturing, solar demand, retail enthusiasm, and volatile positioning. So when somebody offers you one perfect explanation, be careful. Markets usually have layers, not slogans. And one more thing. A big show with roughly 100 dealers, give or take, does something a local shop often can't. It lets specialists speak their own language all day. Variety people find variety people. Note people find note people. World coin people find world coin people. That changes the whole energy of the room. That collector-first mindset is why the room felt measured, not frantic, even with giant headlines hanging over everything outside the convention hall. A late 18th century dollar in a grade that made it reachable instead of fantasy land. That's a great teaching coin, because it reminds people that affordability is relative inside numismatics. You don't always need the best example. Sometimes the smart move is buying the piece that gets you into the chapter at all. Then there were pattern coins, and I get why those stop people in their tracks. Patterns feel like alternate history in metal. They let you look at the road not taken. They're not just coins. They're decisions frozen in time. That's catnip for serious collectors. There was shipwreck material too, which has a completely different energy. Shipwreck coins pull in people who don't even consider themselves coin people yet. Why? Because story sells. You say salvage treasure and all of a sudden the object is doing more than sitting there. It's carrying weather, distance, time, survival, mystery. That's powerful. Then you get into the more technical collector candy, bust-haves with variety diagnostics, Carson City material and government holders, soft packs versus hard packs, questions about what used to be considered problem material versus what the market now finds charming, original, or even desirable. That last part is especially interesting because the hobby keeps evolving. Toning is a perfect example. One generation might discount a look that the next generation hunts down aggressively. The market is always having these quiet little philosophical arguments about beauty, originality, and rarity. According to the latest publicly available collector commentary, fresh-to-market coins have been drawing stronger attention lately precisely because truly new material feels harder to find. At the same time, the broader hobby has extra energy around this year's special mint issues tied to the national anniversary cycle. So when people show up at a major event, they are not just buying metal. They're buying freshness, story, eye appeal, and timing, and that helps explain one of the smartest comments from the floor. This was not mainly a bullion crowd. That matters. Because if you ask the wrong question, you get the wrong read. Were buyers mostly looking for gold or silver? Maybe that's too narrow. At this event, the better answer seemed to be that many of them were looking for numismatics first. True collector material, better coins, world coins, notes, variety pieces, things that require interest, not just urgency. And that's where I want to challenge a lazy assumption. A lot of people online act like whenever chaos rises, every serious metals buyer becomes a pure weight buyer. I don't think that's true. Sometimes chaos does the opposite. Sometimes it reminds people to buy fewer things, but better things. Sometimes it pushes them toward quality they can hold for years, not just ounces they can brag about for a weekend. That doesn't make bullion wrong. It just means collector behavior has more texture than the internet gives it credit for. There was also that historical discussion about older government releases changing the market for certain dates, and that is another lesson worth holding on to. People always assume today's winners were obvious in the moment. They weren't. What now looks like a gift sometimes felt expensive back then. What now looks scarce sometimes got crushed when hidden supply appeared. What now gets celebrated for originality might once have been shoved aside as imperfect. Markets rewrite reputations all the time. Which brings me to the dragon piece. I love that part, not because it was the biggest or rarest thing in the room, but because it revealed something honest. Sometimes your favorite thing is just your favorite thing. You don't need a spreadsheet to justify every purchase. If a design hits you, if it fits your collection, if it connects with the reason you got into this in the first place, that matters. And yes, dragons make absurdly good symbolism for stackers and collectors. Hoards, treasure, fire, greed, protection, obsession. It's almost too on the nose. But the bigger point is this. In the middle of all the yelling about oil and Iran and what metals are supposed to do next, a buyer still walked a room, looked at a case, found a piece he connected with, and decided that was the one going home with him. That is the human side of this market. Not the headline, the choice. And maybe that's the best summary of the whole event. High tension in the background, uncertain signals in gold and silver, plenty of noise. But on the ground, actual buyers were still being buyers. Careful ones, curious ones, specialist ones. People asking questions, comparing surfaces, debating holders, looking at notes, reaching for history, reaching for design, reaching for value in forms that don't always fit the panic script. So, no, I don't think the right lesson here is to let geopolitical fear stampede you. I also don't think the right lesson is to ignore the world completely. That's too simple, too. The shipping route matters. Oil matters. Inflation expectations matter. The dollar matters. Central bank demand matters. Industrial demand matters. And yes, silver remains the kind of market where a strong narrative can return in a hurry when conditions line up. But the key word is when. Not because somebody shouted, not because a thumbnail looked dramatic, when the setup is actually there. Until then, work your plan. Stay curious. Learn the room. Learn the product. Learn the difference between excitement and conviction. And when you find a truly good piece or a truly good entry, don't be afraid to act like a collector who knows why he's buying. That's how you stay steady in a market that keeps trying to make you emotional. And as always, this is for education and perspective, not a command to buy, sell, chase, or panic. Your money deserves your own homework, your own timing, and a clear head.